to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Thank you, intro man. What better way to recap earnings season? We got to get you guys to come watch the show. So we have to talk about what the news is talking about. So it's easy just to throw earnings in the title and maybe some big tech names. And then we'll talk about some of that and then probably talk about a bunch of other things too. So you know what we're doing here at Punch Card Investing. That's kind of what we're getting at. Anyways, before we talk about some of those major big tech earnings and maybe some of any trends or lessons we can take from it, just want to remind everyone to go ahead and tickle the subscribe button. We need everyone on board. And if you haven't already subscribed, what are you waiting for? We don't want you to miss our very frequent, though increasingly infrequent. We've been struggling the last couple of months, guys, with our episodes where, this ever since daylight savings happened, it's just been a total mess trying to get everyone on board at our normal time or around our normal time. So we thank everyone for your patience there. But sometimes it's a struggle. So trying to coordinate all these time zones. But we have Jason joining us today, the After Dinner Investor, first time in a little while. So good to have him back, and always good when we can get a squad of 4+ people in. So that's always great. Before we get in to the rest of the show, I also need to remind everyone to check out the Discord if you haven't already. And just a reminder, because next week is the Berkshire Hathaway annual meeting. If you're going to be in Omaha, definitely swing by the meetup that I will be at on behalf of Punch Card on Friday the 5th. I think it's the 5th. And that'll be details for that are in our community tab on YouTube and also in the Discord. If you want to check that out and you haven't already RSVP'd, please go do that. There's a link to a Google form. Just have to say you're coming, so we can have an approximate head count for the restaurant we'll be at. So just more of a kind of casual meet and greet sort of thing. And yeah, it'd be good to meet some of you who will be in Omaha and see who are all these fine people who've been watching us through really the years now. So it's cool to have put some faces to the names and get a nice community event going for once besides our usual live stream. So check that out if you haven't already. Please RSVP if you haven't already. All right. With that said, we should dive into these earnings, guys. And we got to satisfy the people because we gave them the title that says we're done to talk about earnings. So we better talk about earnings to start, and we can get to some questions and plenty of other things if you guys want to let us know in the chat. So anyone we want to start with in particular? Some were definitely bigger than others. Anyone want to call out a name?
Let's go with Google. Why not?
It's first in the title. We got to go with Google.
I guess so. Yeah.
Although
just follow the title.
Although it's going to be pretty consistent across a lot of these companies. I think Jason mentioned that briefly before we went live here. So, but let's start with Google. I mean, we are on a Google platform right now generating revenue for them. So,
and someone gave us a super chat through that Google platform. Our man Luis coming through once again. We appreciate it as always. Let's pull up Google here. Let's see. Go to financials. I believe these should be updated in ticker by now. But does anyone have kind of the headlines up for Google?
Yeah, I've got some of that. Oh, go for it, Jason.
Yeah, so quarter end, March 31, 2023, revenue's up 3%. Constant currency, it was up 6%. Operating margin down from 30 to 25%. I think the search ads were up a little bit. YouTube was down a little bit. Cloud was up from 5.8 billion to 7.5, rounding up billion. I think they made a profit in their cloud division, a small profit for the first time, because they moved some expenses back to the other Google services, the advertising business. So I think that was like the big headline. Nothing unexpected though.
And then did they report the significant headcount reductions yet on this side? I know they're pretty much all of big tech's kind of going through that, but they still all have like massive share-based compensation and all that good stuff.
Yeah, I'm going to send you a link in the chat. If you want to pull it up, feel free. It's their earnings release. There's at the top of page 3, which would be right below the bottom of page 2. This is how you fill time. No, I'm kidding. There's a section, additional information relating to our quarter, reductions in our workforce, and listen up, Seritage bag holders, office space. Sorry, I'm so hot sometimes. Sorry. $3, Tom? Sorry.
Brutal. Just brutality.
Office space I hadn't heard about. So, but you are starting to hear a lot about I see a lot of commercial real estate headlines out there. So it's interesting to see another one from Alphabet.
Yeah. The official headcount number is 190,711, up from 164,000 call it last year. But they've got a footnote there that includes all of the affected employees. So, that's probably overstating their actual headcount, I guess.
Just a crazy amount of people to just kind of wave a wand. All right, bye. It's crazy.
Yes.
And that's a theme throughout big tech right now, and just like massive layoffs that seem to just keep coming. Like, how many times can you shed 10,000 people and nothing really happens? Just crazy how the
ask Elon.
Yeah, right. That was I think he kind of got it going. He
did get it going. Yeah.
It was like, hey, look what you can do. So get the ball rolling.
He got how many? Like 80% of the stuff?
80%.
80%.
80%. Yeah.
Is that confirmed, or is it kind of just
speculative? He said it in an interview.
Yeah.
And if he said
it was a lot either way. It was a lot.
He said it.
Yeah.
He's like the internet.
Yeah. He is the internet. No, he said it was about 80%. So
it's probably a Twitter poll. Like, what percentage of the company did I fire? I will abide by the results of this this survey.
Yeah. And some of the numbers are just in the description. You've actually got it there, Jack. $2 billion of severance charges. It's just crazy numbers.
That's good for all those people, I guess. What a way to get fired.
Yeah.
Get a full-time salary probably for a year.
There's a note a little bit below there about stock repurchases. So 70 billion they're going to allow themselves to do.
Yeah, right here.
Yeah. That's probably the other main thing that jumped out. Although Alphabet does do a lot of stock-based compensation. I think it's 4 or 5 billion a quarter, I think, is the latest number that came out.
Wow.
Yeah. So
is that trending down now yet? Now that they're shedding headcount, or is
presumably it will?
Yeah, I wonder how much that's going to drop in the next year.
Yeah, but it is nice to see the repurchases come in. Like, I guess there's a couple of ways you can look at it, but Alphabet's had a lot of cash and short-term investments lying around for a long time, which obviously gives investors some confidence that the thing's not going to implode. But
Tom, like over 100 billion of net cash.
It's crazy, yeah.
Just
but
sitting
it's
there.
it definitely feels like it's been several years at this point where that cash could maybe be put to a bit better use. So it's nice to see.
I wonder if you'll see that deployed more towards AI projects, if they're feeling pressure at all from some of the other big players. As I know they I think it was Google, kind of all the big guys are kind of rolling out their attempted competitors to like a ChatGPT sort of thing. And some of them are much more broken than others. So I wonder what sort of investments you'll see in the next year or two on that side of things. Granted, it's a bit more speculative.
It doesn't justify all the cash, though. Like, all the cash that they're holding, it doesn't justify. Like,
right.
You don't need so much for the AI investments. I don't know. I think they should, at some point, follow that route of a special dividend, maybe. Maybe that's too soon still. You guys have any thoughts on that?
Sorry, what you said, the special what, Karan?
do you see these companies at some point paying like a special dividend or something? Because how much cash will they accumulate?
I don't, just because it seems like the preference would be buying stock, even if that's just to hide stock-based compensation. But I'd be a little surprised if some of these companies that have really never done a dividend start doing it all of a sudden. It seems like the new dividend, call it the new dividend, it's not really, but the new preference, mainly because of taxes, would be stock compensation or stock buybacks, I would think.
Yeah, I don't think the market would take that well because, Karan, I've been reading a lot of George Soros lately, theory of reflexivity, and it's a lot about like how if you send a signal to a market, they could think it and then it could become reality. Well, if someone like Alphabet just says, here's 10% of our market cap or whatever in cash, special dividend, like it's a real estate company selling down or whatever, it's kind of like a white flag that's like, hey, we don't innovate. Hey, we have no ideas for growth. And then that premium price of the shares, even though they're down still, like PE of 20, whatever, 18, the market would be like, well, why are we giving you a higher PE? Not speaking about Alphabet, but any big tech in general. Why would they get a high PE if they have no use, if they don't see a great future? So based on the theory of reflexivity, I don't think they would. I don't think they do a special dividend. I think I'm with you, Jack. Just more stock, because the market would like that. What do you think about that, Karan?
Yeah, makes a lot of sense. It's just an idea, just floating it out there.
Yeah. I think the only thing that might change that would be if there's any sort of new taxes or regulations against buybacks that could come at any given time. But that's very much a wild card. You can't really. It's hard to predict that. That'd be my guess.
Did you guys catch 60 Minutes a couple weeks ago? I watched it on Paramount Plus, but they did a story about Alphabet. The CEO was on there, and it was about AI, and it's the real deal. I highly encourage you guys watch that interview and profile of what Alphabet's doing with a company they acquired a few years ago from the UK called DeepMind. That segment, the 60-minute segment, and then was a great kind of opinion article in the Financial Times by some guy who invests in AI all the time and has been doing it for a long time. And he was basically saying that it's OpenAI and DeepMind, which Alphabet owns, are kind of the two leading players. And I've just become convinced that it is like as big as the internet, if not bigger, as big as the iPhone, if not bigger, or mobile. So what's interesting about the quarterly updates, it's like revenue grew, this and that. We fired some people, we're buying back stock. But like when you think about it like a business owner, I go more towards their competitive advantage in search right now, and the way people are kind of coming after that with the chat bots and all that, and then how they're countering that. There's a lot going on there. There was an article that came out that said Samsung was considering going with Bing as their default search engine on the Android phones, that Samsung Android phones, which would just be crazy. And I don't think that's going to happen. But there's a lot business-wise that's going on with Alphabet these days.
That's blasphemy. Bing is the default engine on an Android.
They're going to try and like unmeme Bing.
Yeah, right.
Well, is it any better?
The return of the Windows Phone.
when I read that, I don't think they're going to put Bing as the default, and I think it was just negotiations. Like all this news out there about Bing and their company they're investing in for AI, and it would be like a good time to like go to Google if you're negotiating hardcore with them and say, "Hey, by the way, everyone's talking about your competitor. We're going to talk about them too." But I'd be very surprised. But an article came out saying that employees were like, what is going on? And it's interesting.
Are you guys surprised that we never saw Buffett sort of reverse his public mistake of not buying Google? I'm just looking on Ticker here. It got down to in the 12s on an EV/EBIT multiple last year.
Well, that's I kind of wanted to mention that with Simply Compounding mentions this in the chat. Google's price to free cash flow 22 times, Microsoft's 40 times, Meta 35 times, Apple 27 times, and he concludes big tech is expensive. it's kind of weird because if you look at the multiples, they dipped right around the time you were saying, Tom, and now they're kind of back up in a lot of ways to where they were before that dip. So it's like, how much value is really left there, if any? So it's a good question. I guess it depends on how optimistic you are for cash flow growth. That's always the main question, of course. But it's been a wild couple of years for tech, that's for sure.
Yeah, I'm not sure. The only thing with those numbers, I'm not sure if simply compounding's done this, but particularly with something like Google, you've got to back out the stock-based compensation.
Right.
So the multiple may well be higher. I'm not sure if he's already done that here, but that would be something to keep in mind.
Sneaky.
Yeah, but I mean, I don't want to say I was surprised not to see Buffett buy it, but it wouldn't have been a surprise for him to start a position in Google, I guess is what I'm saying. I think Charlie's come out and said he felt like a horse's ass for missing Google. Yeah, you could argue it got pretty cheap.
Tom, I could very well see them never considering it. Like I can't see them basically doing what they did. Maybe they considered it, but like in their day-to-day life, I don't think they're well, maybe Buffett does. Buffett does search. But unless you like went out of your way to look at Alphabet's price last year, everyone just kind of assumes like big tech is expensive. And then when you think about Alphabet, it's kind of like if you feel like you missed it, you would always kind of feel like you missed it because like it's already, the huge market share and something everyone uses. And you'd have to really kind of dig into it and look at it.
Well, the talk last year especially was all about the adpocalypse. We talked about it a bit, just like ad rates declining across the board. And now the talk's all about, rebounding user growth and whatever it is. AI obviously is a popular one too, but you don't hear about the adpocalypse anymore. Even though it seems like we're in as rocky waters, economically speaking, as we were about a year ago, or at least it's not much better, but you don't hear about it at all. So it's just funny how sentiment follows price follows sentiment.
Yeah, well, Jason, you're right in that ad market day to day. I would think we're still not great out there. Do you have any?
Well, I'm in the performance advertising market, which is things like search, like, I don't know, credit card transaction companies. But like with search, search works really good and you can prove it. And it's kind of the last marketing that a company would cut. But you saw the YouTube revenue was down a little bit. And what I know from like studying Paramount and Warner Brothers, like the more display advertising, the TV advertising, that thing is really in the doldrums right now. But search is kind of just a machine, and I think you see that in their numbers. Yeah, search was up. I mean, it wasn't up a ton, but it was in this quote unquote like horrible economy, horrible advertising market. Search just still going. So
yeah. I guess we'll get to it with Meta as well, but it seems like I mean, presumably it's impacted YouTube as well, but I know there's a bit of a mix with Meta as well, where I think their ad impressions were up, but the pricing per ad is down, which I think a lot of that's probably explained by the switch to short form content. Versus like changes in ad market conditions.
Why don't we get into Meta earnings then, since you brought it up, Tom?
Yeah, sure.
I mean, the stock popped pretty significantly on earnings.
Karan, you had a great tweet.
Yeah.
When you compared Alibaba and Meta. I laughed. You cried, I laughed.
I missed that. What did he say?
He was saying
he pull up Twitter like it doesn't.
Yeah, let me pull it up real quick. It was pretty good.
Let's let him relive the pain. Really sear in the lesson.
It's been 2 years. It's okay. 2 years 2 years more.
I've got a funny meta story for you guys.
Where did you tweet it? I'm trying to find it.
I think it was the last.
Oh, there it is.
No,
found it. Yeah. All right.
Very nice.
Me, a Baba shareholder, looking at Meta pre-market and 6-month chart.
It was up like what 15%?
Yeah, it's like a 15% day or something. Kind of wild. Good stuff.
I talked to an advertiser this week that advertises both on Google and also Facebook or Instagram, and there was some kind of quote, like they're talking about moving money over from Facebook and Instagram to Google and search, and they said something like, "Yeah, we don't really get this good returns on Facebook, or we don't get anywhere near close to these returns, but yeah, we're there." And it's like they know they don't get good returns, but they still spend money there. And I'm not saying that's every advertiser, of course. Like I'm sure people do fine. But there does seem to be something with Facebook and Instagram where there's so many people who use it, and then so many people who make business decisions and advertising decisions use it every day. It's like people just like advertising there, and they like that they're guaranteed to have eyeballs on their ads, I guess.
Well,
I've heard that before.
I wonder, so for like at least on the carpet cleaning side of things, we have a pretty good Facebook presence right now. And we do both Google search and Facebook ads with pretty decent success on both sides. So I kind of wonder with Facebook and Instagram's kind of pivot towards short form video content and also YouTube, I wonder how that's going to affect general ad effectiveness, just because it's like it attracts a different kind of viewer, a different sort of audience when it's short form video content. It's not that nice targeted like interest group or with YouTube, it's usually very, at least old YouTube, a couple of years ago old, it's very intent motivated. You're searching out something and then you can put ads on that. And that still hasn't gone away by any means, but they're, if they're slowly pivoting towards short form kind of discovery sort of videos, not so much intent-based videos, I have to think that's going to be a lot harder to advertise to, just because it's a lot easier to advertise to someone who is searching how to do X, then you can put a product there that solves X, than someone just on like a shorts feed, just getting dopamine hits, kind of TikTok style.
Yeah, it's a different kind of advertising, but I'm to counter for Meta on behalf of Meta, like they're bigger. To me, I'd be more concerned if like people were falling off the product, like it seemed like they were to me, to Facebook, and then TikTok coming in and eating Instagram's lunch. And if they've got something that keeps people engaged, it seems like they figure out how to make money off of it,
They do.
Yeah.
Yeah. Just a little nugget while we're on ad effectiveness. This is from the Meta earnings call. They said, we recently did a study with economists at UC Berkeley. So Facebook initiated study, take this with a grain of salt or whatever, but they concluded that every dollar spent on our ads drives on average $3.31 in revenues for our advertisers in the United States. So
Wow.
Yeah, I don't know how that compares to other platforms, but
well, they have to be somewhat profitable if people keep spending on them, but I wonder what the actual number is.
Yeah.
Do you guys feel bad you missed, like legitimately, do you feel bad, like Karan, you were joking around that? Because I mean, we were there talking in November about Meta, and I think it got down to 10 times earnings
that part.
with a boatload of cash.
That was my only win.
Yeah, Jack.
You're stayed in. Yeah.
Well, it was Meta. Yeah.
Has anyone invested in big tech? Like we should have done this at the beginning of the video, but has anyone invested in Google, Amazon?
Well, since I sold now, I would have been. I don't know. I would definitely consider selling. If I would have considered selling.
I don't think
Meta at this point.
Frank also. Yeah.
Meta's feeling very euphoric to me. Just it was like totally opposite like 6 months ago, or it was just like Meta's dead, which was kind of ridiculous. But then it's turning into like Meta is God or something.
Yeah, everyone's happy because the stock price went up, but
yeah, right.
They still have some business problems, in my opinion.
Yeah,
with Apple and with TikTok.
Absolutely. It's feeling a little euphoric, so it would give me some pause if I was still in. But
Karan, I'm in. Some people consider it big tech, but I'm in Amazon. I don't consider it big tech because it's always day one, and we're going to keep growing. But that's what I'm in.
Startup.
Are Tom or Karan, are you guys in big tech besides big China tech?
Just China tech.
Yeah, not directly. I guess I have a decent chunk of look-through exposure to Apple via Berkshire at this point, but yeah, no.
Tom, I always forget you're in Berkshire for some reason.
It's because it's boring. Like, no one talks about it.
Yeah.
It's not new and exciting.
No.
But yeah, didn't Meta get pretty cheap, like a PE of 10, maybe?
Yeah.
If you backed out the cash, or
I think it was a free cash flow yield of about 10. Yeah.
Yeah.
And it was like
all that
under
drama
$100 a
about
share. Like, yeah, it was.
And then all that drama about the metaverse, and it's like,
yeah, that was all
really
anyone talked about,
it.
even though it was like just completely ignoring the core business.
There were some,
and now people are like completely ignoring the metaverse stuff. So it's like the opposite now. It's like, well, wait.
There were some meta bulls. Like, I could be misremembering this, but I think Rob Vinal at his meeting, maybe it was him. He said something like, that is a lot of money, but if you look at that amount of money that they've set aside to spend on Meta over these few years, and then you just say it's a total loss, there was still an investment justification for the case. So there were people who called this, Yeah,
that was kind of my justification going in around then. It was like down in the 120s. I didn't get much below 100, and it was only there for a little while.
Yeah.
But I was like, okay, I mean, they're going to cut it off at some point if it really is a disaster. So. But I think people were just extrapolating it out like he's never going to stop. Mark's gone insane.
Yeah.
It's like, I mean,
they're still spending on reality labs.
They are.
They've abandoned it. Yeah.
But it's like if it's really bad, I would think they would stop.
They're just not talking about it.
Yeah, that's what I'm saying. Like now, people just ignore the metaverse, and whereas before
you guys
they were
remember
ignoring
the coin, the crypto thing that Facebook had?
Yes.
No one talks about it. Yeah.
Yeah, I did forget about that one. Yeah.
If there was one, yeah, go ahead, Tom.
I was just gonna say we're still talking about income from operations for Facebook here being down 15%. Like the stock was up a lot, but
daily active users are up.
It's about efficiency.
Therefore, it's great.
Yeah, yeah. I mean, this isn't the type of thing that, for me at least, like obviously other people are different, but this isn't the type of thing I would beat myself up about missing. Like there were genuine, massive changes in how capital was being allocated in the business, and you just it was just super uncertain about where things still are going to go. And there were genuine changes on the advertising side as well with iOS tracking, and I think Android ended up doing something similar. Could be wrong there.
My conclusion is I missed it as a trade, but it's not as an investment, because it still wouldn't be something I would want to be in long term or want to invest. But right before, not these earnings, but the prior earnings 3 months ago, I was reading the press, and Facebook, it seemed like they were dealing with the press because there were these stories that were coming out saying that how much more efficient they're getting. And at that time, market sentiment was really negative. But I had a feeling that, like, okay, this guy controls this company. His wealth is tied to this stock. All he has to do is just stop talking about the metaverse and, like, lay people off and get more efficient and clean things up, and the market sentiment would come back. And that's exactly what it did. But I missed the trade.
But
so that's
Jason, just before the Facebook bottom, there was a Chinese tech bottom, and you caught that, and then you sold the top also. So
I know,
you
but
had that trade.
I got that one, but I missed this one.
Can't have them all.
I know. But when you have them all for a couple years, Karan, it feels like you can have them all.
I feel like trading is a dirty word here.
The whole
channel.
The whole like founder net worth tied up in the business is an interesting one when you get to this extreme, because Zuckerberg could lose 99% of his net worth and still be extremely rich. And that's quite different from like
what's his net worth? Let me. I'm not
75 billion.
Approximately
75 billion. So if he lost 99%, what does that put him down to? Is that
a little under
$1
billion?
99?
It's hundreds of millions,
right?
It'd be hundreds of millions, or something like that.
We've got a rule, Jason, that you don't do maths live.
I guess that's
that would be
750
million.
As a
he'll be fine.
I don't think he would be fine. I don't think.
Well,
I don't
not
think
financially, but maybe like mentally drained.
I'd feel bad for Rob Vinal before Mark Zuckerberg. Like,
all
I'd
the
be
other
really worried about him.
shareholders.
I'm just
Like,
saying
he'll be like
there are
Carvana, and then what was the other company? And then was he in Party
there are
City also?
there are some guys who have so much money that it doesn't matter. They can lose a bunch. But I truly believe like that the way that stock price dropped when the market turned on Meta, I believe it affected him and like kind of woke him up and improved him as a manager. And I think
Do robots feel emotions though?
I don't think he's a robot. I think he's skilled. But 75 billion down to less than $1 billion. That would that's no fun for anybody. I just have a theory that nobody likes losing money.
No, yeah.
Nobody. So
I think that's pretty safe to say.
FTX sponsored.
But he turned it around. But like you're saying, for now, Tom, like we'll see what happens with if doesn't it feel like they pulled a trick out of a hat, like or a card out of a hat, like stop talking about the metaverse, talk about AI, laying people off.
Talk about laying people off.
What are you going to do for the next 5 years? So we'll see. But yeah, interesting story to watch.
I mean, they've also got competition coming up from Apple. Like Eunice mentioned Apple in the chat, but the whole headset, Oculus thing. I mean, we haven't heard anything from Apple clearly, but that's expected, right?
Yeah.
Yeah.
If it is at all successful, any of the metaverse stuff, like competition is going to flood in, you would think. So, how much is actually there? If it actually converts, like it's impossible to say, but sort of like is it kind of like the Tesla problem? Where like, okay, great, they get out ahead with electric vehicles. Now everyone does electric vehicles. It'd be kind of like that deal, or same as smartphones.
Apple's doing electric too, so.
Yeah.
No one else can do electric vehicles profitably, though. That's the problem.
Sure.
Legitimately, yeah.
Need more credits.
What do you guys think about Eunice's question, by the way?
BYD,
thoughts on that?
Yes,
yeah.
BYD.
What about what was that, Karan?
Eunice's question about Apple offering the high yield savings account, the 4%, something that they've started offering.
I think
is that the one that's partnered with Goldman, or how they do it? Yeah,
I think it's strong. I have not gone out of my way to do Apple Pay or pay with my Apple credit card, but I find myself doing that from time to time because it's just so convenient. Like maybe I'll be on mobile, the credit card isn't saved, and I'll just be like, all right, I could get more cash back with this other card, but I'm just going to click this button because it's convenient. So there definitely is something to there is. If I was an Apple shareholder, I'd be feeling really good about that, about them getting into financial stuff.
Dude, Apple's going to own the planet.
They're competing with everyone, literally. Like
they're smooth about it too. They don't make a lot of noise.
They're very smooth about it. That's the key difference. And they do a lot in house, so it doesn't raise the same antitrust concerns as if they were acquiring.
Great point, Jack.
Something like that. Yeah. So I think that's why it seems so smooth, because there's no like I mean, we just saw Microsoft with Activision that British regulators are trying to block it. The merger between two American companies. The Brits are like, no.
Yeah, so, what is that about? That's so weird.
I don't know. Antitrust law is bizarre. Is all I'll say. Very bizarre.
Hey, Jack, can I ask you a question about law? Besides, because I'm sure
I'm not advising you, but sure.
All right, start the clock. But just a little pro bono here. I'm sure you're hearing like people talking about AI in a buzzy way, like our company does, or our firm does this, our firm does that. But have you seen any actual like AI in the overall legal world, or have you heard about any lawyers starting to use AI?
I've used ChatGPT to like draft clauses, or like not like draft completely, but to get ideas or just kind of get a start. Like for sure. I mean, because you look at it this way, like what ChatGPT appears to have replaced very effectively is kind of the template market, the generic template market, where I'm a landlord somewhere and I want to find a lease template and I don't want to hire an attorney, even though you probably should hire an attorney for that. But there's all these like free templates online or whatever. Now you can kind of, rather than going to get one of those, and maybe it's behind a paywall, you can actually go to ChatGPT and get like basically that same template, but customized to you, and customized to whatever. So it's like a nice starting spot. The starting spot is much further along, I guess is one way to put it. I still would say you'd want an attorney to look at it, because ChatGPT might not know any local regulations that have changed, especially with like something like a lease. But anyways, I can't advise people to go without an attorney, right? It's in my own interest.
I'm hearing a lot of, I'm seeing it firsthand every day with Alphabet. And what's crazy is like, I've been inside of Google's advertising platform every day since 2014, and they're one of the 2 leaders in AI with DeepMind. And for years, I had been seeing their product have more and more, they would call it smart, they would call it machine learning. Now it's called AI, but more and more computing power behind it. And something like a switch flipped, like in the last year, where that form of advertising on there got a lot more accurate and a lot more powerful. And so I don't know, the world, it's just, I'm a believer in it, if you will, with AI.
Oh, for sure.
But I was curious.
It's undeniable that it's
in the law world.
Super powerful. It's undeniable, and it's very broad usage, well beyond just law. Anything. I mean, you can pretty much anything. You can think of some application that not necessarily replaces, but it at least speeds accelerates. It gets you like to your base level much faster. He saves time for everyone. So I mean, undeniably powerful tool even now. And like, it's just amazing, even with ChatGPT, which is like continuously censoring itself as they move along. And it's still super powerful. I would argue it's a lot less powerful than what it was when it was practically uncensored. It was crazy what you could get it to do. And they're trying to stop that, but the power is clearly there. It's just like a matter of how much they want to unlock it and how much they want to censor it. And that goes for anyone developing one of these tools. But
cool.
Yeah. I'm excited for it. It's a little scary at the same time when you see how powerful it is. It makes you feel insignificant a little bit. But
I think anybody who works with information is feeling that. But
it's a weird feeling. It's a very weird feeling. But yeah.
Do you guys mind if we just go back to the Apple Card for a sec? And do you guys know, is that just a US thing at the moment, the Apple Card? Or are you guys not sure?
I don't know. I'd assume so, but I don't know.
Do you guys have Apple Cards?
I do. Yeah. I have a MasterCard credit card that maybe you can get it through the mail, but I've never gotten it, and it's an Apple card. Yeah.
Yeah.
I don't have really any Apple products actually. I'm out of the ecosystem. So yeah, I don't.
Are you in the Android one instead?
I am.
Because it's not much more of an ecosystem. Not as much of an ecosystem on the Android side. I don't know.
I guess, but I use Google products for everything, like YouTube, Gmail. So I mean, calendar. So I mean, I'd be pretty upset if that was removed. So it's probably not as powerful as the Apple one, because Apple does a real nice job of making it very painful to switch and pressuring you to stay in there. But at least from my understanding, but there's still plenty of an ecosystem there, just not quite as closed off.
Yeah. Has anyone dug into or I guess if Apple even disclosed it, what the model behind their new savings account is? Like, is Goldman just running everything and they're clipping the ticket, or I don't know, like where does that cash go when you put money into an Apple savings account?
That's actually a very good question.
Goldman has a consumer-facing bank called Marcus,
right?
That they've tried to grow, and I was reading that they were kind of over that, but that might be where it goes.
Did they have a huge loss on Marcus?
That's quite a few years old at this point, isn't it? Like, I want to say it's been like a decade, or has it not been that long when they rolled that out?
It could be a few years.
It feels like it's been a long time since they initially rolled out Marcus. I remember seeing ads for it when they first did it.
Tom, are you looking at trying to invest in Apple because now it's a bank, so you can do it?
I just said I more or less am invested in Apple. So
family owned.
Yeah. Oh no, I'm just trying to figure out how it works.
It's gotten to what I think over 40% of Berkshire's equity portfolio, isn't it?
The Apple position is, it's about there. Yeah, I'm not sure how much of the market cap it is at this point.
It's kind of a genius thing, right, Tom? Because Apple could not just become a bank because all the regulations probably. So you would think they need a partner like Goldman.
Yeah, I'm not sure.
So
yeah,
does this count as
I'm
float?
sure that's the easier way to do it.
No, it's for sure. It's for sure that that's why they're partnered. But yeah, I don't know what their cut is.
Can you guys imagine though, like in 30 years, doesn't it seem like just absolutely ridiculous that just not someone that needs a loan or a business person or whatever, but just say like a 20-year-old or something, like why would they go into a bank, make a bank account, go through all that paperwork when they have what they've had for probably a decade at that point, a phone, and they can just like scan a check on their phone or whatever.
Why are checks being used at that point?
Good point. Or their family member. You're right. No, you're right. Could just load up their new Apple bank account on their phone, and they can do things that way. So,
Apple's got to make it another 30 years first. That's easier said than done.
Jason, you sound like someone who doesn't use crypto. I'm just saying.
Well, that would have hurt a couple of years ago, but
it's funny you mentioned that
because today.
I'm about to go into the bank on Monday to open a business account. Business accounts, for some reason, are way harder to open online. At least good business accounts.
Yeah.
But personally, you can open up in a second.
No, but I love what Apple's doing. You got the card they're working on. Who knows? But they're working on a bunch of health stuff, which is a growing industry, and then financial. So.
I want to know what your guys' thoughts on kind of all these big tech giants, but really just big companies in general. Because we like to imagine that they'll never go away, but obviously at least some will in time. And I struggle to picture a future without an Apple, without a Google, or whatever takes that over. But at some point it's going to happen. But I don't know if you give any thought to that. But like I know intuitively, like, yes, it's extremely hard to run businesses for a long time. Very few make it past a number of decades. So that means mathematically, most of these companies probably aren't going to be around by the time we die. But I can't even imagine that. Like, it's so like, it's a part of so much of what we do. I don't know. I'm just kind of spitballing here, but like, do you guys ever think about that?
I think about that all the time with destination analysis. It's one of my checklist items. And like when I own Amazon, I try to think like, who could take them out today, AWS or retail like today. And then could I see them doing well in 10 to 15 years? And I think with something like search or something like phones, like it's technology. So something very well could come along. And knock them off, but you just have to be aware that it could happen, but you just have to look at like, well, is it happening now? It doesn't seem like it, but just as long as you have it on your radar, and as long as you don't have like pie in the sky assumptions, like, well, I'm investing with Apple today because I think over the next 35 years they're going to get this cash flow return, and now it looks great on DCF. Monish talks about that with Apple specifically. He says like, it looks great, but for me to buy it at these prices, I would need to know what's going to happen 30 years from now, and I don't know. That's his example with Apple, paraphrasing. But yeah, that's how I've understood him to look at it.
Yeah, you're focusing on the stuff that you can actually observe.
Hey, pull up that comment, Jack. Amazon can be easily replaced. I should read comments more often. That's how would that happen? If anyone else wants to chime in,
it's a goddamn retailer or something like that. Is that why?
Well, that's part of their business, but
I know they got
easily
well beyond that. But to quote a legend,
what about IBM? Like, do you guys see any of these companies ending up like IBM at some point? Like,
that's a good point, Ron, just because that's a good point. Thinking about like, well, don't think about just that something could get knocked off, but something could just stop growing, basically.
That's kind of where my thought about the dividend came through, like just looking at IBM eventually. I mean, that's one possibility of a destination for some of these companies. But yeah.
It's hard to know. Like, I mean, some of these guys are not growing like they used to grow, but if the economy picks back up, if some of their stuff they're working on picks up, you could see them growing again, and then it would be hard to. I mean, even the fact that you're thinking about IBM with some of these companies is kind of scary.
No, but like, I mean,
companies,
IBM has like their growing section, which was called Kyndryl, and they've spun that off as a separate company. They're letting that be the growth engine, and the legacy business is, managing all the other issues. So.
Right. I got to say, I love this headline. I love that people sold the stock. I bought stock today because to me, when I see something like this, basically they're saying we're working with our customers to make sure they're happy and they can spend less if they want to spend less. And then my point is like, keep them on the cloud, make them love Amazon Cloud, Amazon Web Services, work with them. And then when Amazon Web Services comes out with their next products and services that are part of the cloud, we'll make it back that way. So I thought the market was being rather silly today about Amazon.
Scale economies, right?
Yeah, and just, making your customer happy 101.
I think scale economies for the retail side for sure. I don't know about the cloud. That's where the fat margins live.
That's what they're
scale economy is shared. Scale economy is shared. I mean, like the next.
Yeah, they're guiding towards lower margins moving forward. So let's see.
Yeah, have we even talked about Microsoft yet? Speaking of big tech, they always seem to fly under the radar somehow.
Yeah, I mean, we mentioned the Activision thing. That seemed to be some of the bigger news. But what even happened with their earnings? I don't even think I saw Microsoft earnings info. What happened there?
Do we count Snapchat as big tech? Or is it like medium tech at this point?
It's medium tech.
So Jack, check this out. I'll send you a press release they put out.
Thanks.
Revenue was up 7%.
You got it.
Operating income up 10%. Net income up 9%. Not too bad, guys. For
nice
a
and
business
easy.
this size.
Nice and easy.
If this is supposed to be the tough period.
Yeah, and much better in constant currency for each of those things as well, which was actually a bit of a theme across, well, I guess kind of has to be, but it was a theme across a few of these companies.
And they seem to be on the right side. Well, I mean, not that the rest are on the wrong side, but they seem to be on maybe one of the leaders with the AI stuff, given how they were positioned with OpenAI and everything else. It seems like it'll be, if anything, just like a catalyst for more growth in everything going forward, I would think. But yeah, like you're kind of saying, like they very quietly just keep pushing along. Like somehow they get overlooked when there's an enormous company. It's just wild.
Yeah, and they're retiring shares as well as having Azure just.
You can't really point at any one thing and be like, oh, that's a big problem. Like it's just lots of good stuff.
Yeah, like the question before about like when are these things going to die or how long are they going to survive or whatever. It's a tough one because they're all in, I guess, tech businesses, which in theory could be disrupted a little quicker than some other stuff. But they're also like cash rich. They can kind of get into other things.
They've got a runway for a while
if they need to. Maybe something like Meta seems the most exposed to having some competitor pop up overnight. I guess we've seen that a little bit with TikTok, but they've seemed to have just, as they do, like cloned all the TikTok features and Instagram Reels and kind of keep trucking on.
Well, I guess is that really because they're the most software based, whereas Microsoft, Amazon have a lot more physical. With Microsoft, you have cloud, and you need servers, physical servers for that. I mean, Facebook's doing that too, but to a lesser scale. Is that kind of the difference there? It's just like physical versus digital?
I think something like Microsoft and Apple are building sort of an ecosystem around like their core product,
Yeah.
Whereas you don't have that with the social media platform.
You could argue Facebook's trying to do that. Whether they'll be successful is a huge question mark. But you know, if they're trying to get that metaverse hardware advantage.
I guess what I'm saying is like when everyone's parents get on Facebook, they move to the next platform, and like you kind of don't have that with Windows.
Sure. Yeah, Windows isn't one of the strongest moats in the entire world.
Yeah,
that's a good point. Facebook, imagine Facebook had a license.
Yeah,
it's not really how it works.
You talking about Twitter?
No.
Got to pay to use that thing now.
No, I mean, geez, we got a Houston storm rolling in. My house just shook. So if I go down, you know why.
What's
anything
your
else
guys?
with from earnings? Like, it doesn't have to be in big tech. I would just note the super chat from KK Investing. Appreciate it. It says just a thanks from a fan of the group and channel. Thank you.
Thanks.
Chevron put out their earnings and Exxon did as well. And there's a lot of them.
What were they like?
Good. I mean, it's just like they're rolling in it, man. What the most interesting thing I saw, oh, by the way, God, they're just talking about how much I'm looking at their presentation, how much free cash, how much shares they bought back over the years. But I had a small investment in Chevron. I moved it over to Oxy. Tom, you'd find this interesting. PV10 2022, not PV10. I don't do that anymore. Standardized measure to take into the tax effects at like $90 oil, whatever it was for 2022. Oxy is basically 50 billion today, where the market cap is. And Chevron, their price is like 2 times their standardized measure. So that plus the Buffett recently buying more Oxy moved me from Chevron to Oxy. But I mean, they're both like super well run, and same with Exxon right now.
We must be starting to see lower oil prices flow through by now, or not so much.
Just a little bit, but they're still like really high compared to the last few years. I mean, in Q3 2022, I guess that was the peak. So Q4 was lower, Q1 was lower, but like it's still a really, really good business right now. And it's just they make a lot more money than it costs to produce that oil. The Exxon CEO was on Squawk Box this morning. I saw a clip on Twitter, and he was saying like, he was basically saying like, I'm just looking at this from like a straightforward perspective. There's not a lot of investment worldwide in new oil and gas. And if China demand comes back, if the travel season this summer is as it would normally be expected to be, he sees a tight market and not a lot of new investment. So that kind of made me feel good as a person who owns a couple oil businesses.
What would change that? I feel like a lot of that comes from regulatory pressures. Is that really it?
Well, there's a beautiful thing happened. It guess depends how you look at it. But in the United States oil and gas business, there was this big event in 2015, and then also with 2020, where like these shale, first with natural gas and then oil, like the market just realized, hey, we're not making any money, and you basically
right,
yeah,
the fracking boom and all that.
So it doesn't seem like, if you were asking like what would bring back the investment, at least on the U.S. side, I mean, it would have to be sustained, super high, $120 plus oil, but like over multiple years. So then management could credibly go to their shareholders, and their shareholders would be asking them, hey, drill more. We're confident these prices are going to stay high. But right now it's all about
for some reason I
cash.
forget, like, yeah, you're right. A bunch of companies lost a bunch of money when they went on these oil projects. So maybe the regulatory thing is just an excuse.
Well, I mean, like the huge ones, like the Exxon guy was talking about, or he wasn't talking about, but the hosts were kind of egging him to talk about it. Like they were kind of saying like, how can the government basically say stop drilling, and then 6 months later say no, drill everything you have, and not give a clear environment. But I mean, really, it's more so the power of the shareholders. They're not going to get played again. And what's crazy about oil with shale, from like, there's some crazy statistic from like 2012 to 2021 or something like that. Shale public oil companies lost money, like in terms of cash flow, like they lost money. over all those years. And then in 1 year, in 2022, they made enough money last year to cover the prior decade. So it's just an incredible thing. Eunice has an interesting comment, because every comment Eunice makes is interesting.
Yeah,
but he's got a question about Buffett with Oxy, and I was wondering if anyone had seen that Monish video.
I've seen it, but I've forgotten exactly what he said, to be honest.
Basically, he was saying, like, he thinks first thing that was interesting is he said Charlie had told him that they would love to just own a huge oil company and own a chunk of the Permian if they knew that oil company was just going to produce what they had and give it back to shareholders, which essentially that's Oxy, what they found in Oxy. He said that Monish said that he thinks that they bought and buy more Chevron because they can't buy as much Oxy as they want. So he basically, he was saying he thinks they like Oxy better. Another thing that helped me move over to Oxy. And then I was looking at the projected numbers of like operating cash flow minus capital expenditures for Oxy versus, and you could call that free cash, versus their price of their stock. And for the foreseeable future, it looks like it's like an 18 to 21% cash flow yield versus the price of the business now. And they're just going to give that back with dividends and repurchases. And on top of that, you have like a free call option, because that's assuming like $80, $90 oil. And if oil goes higher, which it very well could, the investment gets even better. So that was a little bit of what he was saying, and that's how I interpret it. I added the stuff about things getting even better, but I tweeted out at Monish, and he hearted it, because I thanked him for sharing that, because that was a really helpful thing that he shared at the end of that video.
I bet Brad will have a breakdown on it shortly too.
Hilarious comment from Waters Free. Probably Brad has seen it.
That was my first thought. I was like, Brad's probably seen it.
Yeah.
We did get a super chat from Jonathan here. Hope to see you next weekend, Jack. I hope to see you there, Jonathan. Appreciate it.
On Waters Free's second comment there about if oil goes down,
I think Karan tried to say this when we were doing a little book club yesterday. He was like, "What if oil goes down?" I had to correct you, Karan. I got a little heated. Oil's not going down over the long term. It's just not going down. It's necessary, and there's not going to be a ton of like massive. It doesn't look like there's going to be a ton of massive investment. So the demand's going to be there. We could have a hard year, a hard 6 months or whatever, a down economy, but the demand's going to be there.
Jason, living where I am, like $120 oil is great for me. Just saying.
I know. You would know that the demand's going to be there.
What I was going to say
is higher for longer. Yeah.
Yeah, I think Oxy. I may be getting Oxy and Chevron confused here, but I think Oxy have come out and said their dividend at least is sustainable at something like $40 oil.
Yeah, I love when Suncor used to do this quite a bit. I love when they kind of lay out like, here's the cash we're going to make at different oil prices, and here's what we would do. So like paying the debt is the most important thing, share repurchases, maintenance capital, that kind of stuff. But they lay out at the different price scenarios what they do. And that when I had invested in Suncor, that had like given me confidence. Like, okay, I don't think oil is going to go down to 40 or 30 or whatever, but if it does, we can still pay our debt. So that gave me confidence.
And any other earnings or other companies to highlight to wrap up?
I have one question for you guys. This whole like big tech earnings thing I was telling you before the show, like with Amazon, and I didn't look at it. I don't even care. It's not about one quarter. And it was so like just very clear. Like all these companies are laying people off. They're getting more efficient. Revenue's up a little. Like I was telling you. So like this, what I'm looking for on a quarterly basis is like, does anything change with the business? Does anything scare me? So I'd be curious, like how deep you guys go on earnings. What's your quarterly earnings process like? Like, do you dig into it, or you just kind of keep it high level?
I think it depends on the company. Like for me, with newer companies in the portfolio, I would say I go much deeper than companies that I've owned for several years. And yeah, I guess in a lot of ways, you're looking for things that might break the thesis.
Yeah, if there's a fundamental shift or trend change. That's kind of
probably not getting too caught up in the noise.
Just about to say, you got to be careful, like not getting caught up in the headlines, because there's so much energy around like earnings releases and
tons.
The news and Twitter and all that.
We're feeding into that.
Hey, you
got to do what you got to do.
Got to do what you got to do, Jack.
Yeah.
But, real quick, Tom. People have been asking about Hingham in the comments.
Yeah, that was a while back.
Do you follow? Like, are you following them quarter to quarter? Did they have anything interesting come out?
That's kind of the company I was talking about actually when I said I'm reading a little closer when they're newer companies. They had their annual meeting yesterday as well. I caught most of it. It started at like 6 a.m. my time, so I was kind of just watching it in bed for a little while there, but then I had to go to work. I honestly was a little surprised how squeezed they're getting on the funding side. There's still a lot of things that Hingham do very well. Like they have very low cost operation.
In a bank situation?
So basically the cost of
the deposits.
Could be deposits or could be like Federal Home Loan Bank kind of more wholesale funding, or could be CDs or debt or but generally we're talking about deposits basically. So the cost of those deposits has leapt up a lot for Hingham in the past year or so. And there's a lag for them to get the high yields on the loan side because they're writing loans that might be fixed for 1, 2, 3, 4, 5 years, maybe even a little longer. So there's a timing mismatch there. They're probably getting a little more squeezed on that margin than I had anticipated, to be honest. So that's probably the only highlight, really. Like no major red flags with people not paying their loans or what have you. But
it's a tough world for banking right now. So
you guys remember that report about like all the regional bank CEOs going to Omaha to meet Buffett?
Yes.
Has there been any update? Like, has he actually gotten into any of the regional banks? Do you guys know?
No, I don't
Is
know.
traffic up or down?
Has he gotten in? Is it news that's gone under the radar? Kind of.
I haven't heard anything about it. The one thing I thought about that though was, I was like, isn't Berkshire past that in terms of size? Like dealing with some of these regional banks.
I think
he might have looked at it, told Tim Cook like start the high yield savings account. Maybe
right.
That's where you Apple got the idea from.
Yeah,
I never thought of it that way, but that's not.
I'll tell you one quick thing that's interesting about Buffett, and Tom, you'd appreciate this as someone who follows banks. When he was in Japan, Becky Quick asked him a question like, "You had sold your banks over the last couple of years, most of your banks. Why? What? Like, did you see this thing coming about? Like, when interest rates go up, some of these guys are going to be caught, with their pants down or whatever." And he was like, "Yeah, I saw it." Of course I saw it. Like I read the quarterly reports. I follow this stuff. Yep. But what I was struck by was how reflexive he was like, yeah, I saw this. That's why I was. And he was like, I'm not going to name anything individually, but I saw a lot of things that worried me. And I was like, man, this guy's just no surprise, but it's like, this guy's the best,
Mm-hmm. Yeah, for sure.
Not embarrassed. I think that's a good spot to wrap up. We'll be, I don't know what we're going to do next week. I'll be in Omaha, so it'd be cool to do like a Berkshire weekend sort of pre-meeting show.
Is the meeting on Saturday morning?
It's on Saturday. It'll be Saturday morning. So
very early, so you may not want to be up late.
Yeah, I know exactly. Yeah. It would have to be an earlier show for me, but I'll be coming from the meetup. Like I said at the top of the show, if you haven't already RSVP'd for the meetup in Omaha, go to our community tab on YouTube or go to the Discord. Cool. It's been posted on Twitter and places like that if you want to check it out there too. So please do that if you haven't already. And in the meantime, subscribe, comment, like the video if you're into that, and check out all the great stuff in the description below. But with that said, until next time, everyone.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.